Welcome to Mutual Fund Family.
Log on to mutualfundfamily.com for more info.
Today I'm going to be talking about Axis Triple Advantage Fund and specifically the secret sauce of this fund, which is rebalancing. Rebalancing is the secret no one talks about when it comes to investing. What is rebalancing? Rebalancing is an asset allocation strategy where not only do you invest in your original asset allocation, but you periodically review to ensure that you are always consistent with your asset allocation strategy. In this fund, we are roughly equally allocated to equities, bonds and gold. In fact, the benchmark weights we have selected are 35% equity, 35% fixed income and 30% gold, which is nearly equal allocation across the three asset classes. For this example that I am going to illustrate the benefits of rebalancing, I have assumed a simple portfolio which comprises equal weights of equities, bonds and gold, where equity is represented by the Nifty, bonds by the ISEC bond index and gold using the international prices and converted to rupees. We have gone back in time to 1994 and we are tracing the evolution of these three asset classes over this period of time. It is no surprise that over 18 years the best performing asset class in India has been gold. If you had invested 100 rupees in gold in 1994, as of the end of 2012 your 100 rupees would have been worth 762. If you had invested in bonds, which was the next best performing asset class in 1994, a sum of rupees 100, that would have become 639 rupees 18 years later. Equities during this period has lagged, especially post 2008 when we had a sharp fall in the markets, and 100 rupees invested back in 1994 would have become nearly 500. Not bad nevertheless. Now what is really interesting for us is if you just take the average return over this period of time, over the last 18 years, the average, the simple average, if you had just invested 100, 100, 100 in each of these three asset classes, you would have arrived at a number of 634. Not bad by any stretch of the imagination. That is 100 invested has become over 600 in a period of 18 years. What we found really interesting is that if you had rebalanced your portfolio though to one third, one third, one third weight on a regular basis, in this example monthly, then your cumulative return, that is of 100 invested, your cumulative value is now 758, which is almost exactly equal to the return delivered by the best performing asset class during this period, which is gold. So gold delivered 762 on an initial investment of 100, and the mixed portfolio, which has one third gold, one third bonds and one third equities, has delivered 758, which is almost exactly the same return. What is interesting, and remember that we only have one third allocation to the best performing asset. Why has this happened over a period of time? It's because of the magic of rebalancing. If you go back in time to the 90s and early 2000s, the best performing asset class was bonds. We had very high interest rates and that was a time when bonds did very well. In the middle part of the last decade, and if you remember between 2003 and 2008, the best performing asset class was equities and the economy recovered. So as the bonds were going through a weak time, equities came to the rescue. Equities started underperforming after 2008, by which time gold had started its run, because gold has done very well in a almost crisis like environment that we saw following the global financial crisis. So each of these three asset classes has performed at a different point of time, and if you had rebalanced by booking profits as one asset went up, so which is to say that if equities go up, you take profits in equities and go to the other two asset classes which have not performed. If gold goes up, you take profits in gold and move into the other assets which have not performed, and if bonds go up, you do the same. If you do this on a regular basis, then you are able to outperform a simple model, which is one third, one third, one third, over this 18 years to deliver an excess return of 125 rupees. So what does that mean? If you had invested 100 rupees in a one third, one third, one third portfolio and did no rebalancing, you would have ended up at 639. Instead, if you had invested in a rebalanced portfolio, you would have ended up at 758. The difference of 125 rupees, remember, is significantly greater than the original 100 you had invested at the start of this period. That is the magic of rebalancing, and that's why we always advise investors that when they choose an asset allocation strategy, no matter what your asset allocation strategy is, it's not only important to start with an asset allocation strategy, but to keep rebalancing. In Axis Triple Advantage Fund, the benefit that you get is that the rebalancing is done in a disciplined manner inside the portfolio with much lower transaction costs, and the fund does not pay capital gains tax on its rebalancing. That is, because the mutual fund is tax exempt, we are able to buy and sell equities, gold and bonds in the fund without having high transaction costs or taxes. And that's really the story of Axis Triple Advantage Fund. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Thanks for watching. Drop a like, leave a comment, and don't forget to subscribe Mutual Fund family.